Hello everyone, welcome back to SAP for Professionals. I am Arkeda, Senior SAP Trainer. Today we will discuss one of the most practical business scenario, milestone based external services, a procurement with mandatory down payment. Here we are going to cover milestone based configuration. Then we will understand about the service acceptance and payment, and the third one, invoice verifications and clearing. So in external services, procurement, unlike purchasing physical goods, the value is often released incrementally. A milestone invoicing plan ensures that the vendor is paid only when specified stages, that is milestones, of the service project are formally completed and accepted. Furthermore, for large projects, vendors often require a mandatory down payment and advance, you can say, before starting the work. The provided steps detailed the configuration, master data setup, purchase order creation, and subsequent financial settlement for this scenario. Using a building construction project as the real-time example, we will understand all the configurations and setups. So basically, this is milestone based external services procurement with mandatory down payment is used when we purchase services like building construction, machinery installation, EPC projects, civil, mechanical, electrical outsourcing jobs. So there it is very much useful. Here service delivery does not come all at once. It happens milestone by milestone, so payment cannot be done fully at the beginning. It is linked to work completion stages, and vendors often demand advance payment to begin the project. This is called a mandatory down payment process. So what is milestone based external services procurement? So we'll understand about the concept first. It means the service is delivered in parts. Payment is released only after each milestone is completed. The progress is verified by the buying company. For an example, a building construction project milestones may be foundation completion completed, 10% advance it has taken. So ground floor completed, 20% advance it can take. Then structure completed, 40% advance it can take. So final handover, rest 30% will be paid. So SAP must handle the structure of milestones, who will perform the work, how much to pay at each stage, advance payment and clearing, vendor invoice reduction after down payment. So all these things we are going to cover today's session. So we'll also assume a real-time scenario, and we'll perform that scenario in a SAP system, and we'll understand what are the documents we need to create here to understand this milestone based external service procurement. So imagine a company like Vishal Shipping Limited, VISH is the company code. So make contracts with Bajaj Electrics, who is a vendor for him. So vendor code is 405 for a full building construction project, let's say valued at rupees 1 lakh. So advance requirement, that is down payment, Bajaj Electrics require a 20% mandatory down payment, 20,000 rupees to mobilize equipment. So milestone structure, the PO is set up with a V1 building milestone plan. The plan dictates that the first 10%, rupees 10,000, is paid only after the foundation completed. Milestone here is used, ZM01 is achieved. Process flow would be, first we will create a PO with the 20% of mandatory down payment. Then Vishal Shipping Limited pays the 20,000 rupees down payment using the transaction code F48. Then Bajaj Electrics complete the foundation. Vishal Shipping Limited approves the service entry sheet, that is through ML81N. Then Bajaj Electrics invoice for the first milestone, rupees 10,000 plus outstanding remaining values. Then Vishal Shipping Limited processes the invoice and uses the down payment clearing function to deduct the 20,000 rupees in advance. already paid from the total liabilities. So here using F54 transaction code and F53, Vishal Shipping Limited clears the financial accounts, ensuring the vendor only receives net payment for completed work, minus the initial advance. So this overall process ensures that the complex service contracts are managed transparently, payments are linked directly to measurable progress, and mandatory advances are accounted for precisely during the subsequent invoicing process. So here in phase 1 we will go for the configuration. We'll understand the configuration here. In configuration, first define the service categories. The service categories can be created in SPRO, material management, external services, and service master data. Define service categories. In the service categories are high level classification used to group similar services. They are essential for structuring the service master data, like AC03 transaction code. For an example, here we are going to define a custom category BUIL, building construction. Then second, we are going define invoicing plan types, SPRO, material management, purchasing, PO, purchase order, set of billing plan types. So here in this step defines the rules for how the payment schedules will be behave. The system supports periodic and partial invoicing plans. We use the partial type for milestones. For an example, defining type B1 as the building milestone plan. Then third, maintain date descriptions for milestones. You will go SPRO, material management, purchasing, purchase order, invoice plan, maintain the date IDs. So these descriptions represent the specific identifiable events in the project that trigger an invoice. Example, defining codes like ZM01 for foundation completed up to ZM07 for final handover. Then fourth, maintain date category for invoicing plan type. In SPRO, IMM, material management, purchasing, then purchase order, then invoicing plan. So here date categories link the general milestone descriptions that is created in the step 3 to the specific invoicing plan type B1. So example, assigning the date category C1, building foundation, to invoicing plan type B1. So referencing the date description ZM01. So the next fifth, define default date category. SPRO, material management, purchasing, purchase order, invoicing plan is the path. So this sets which date category should be proposed by default when the specific invoicing plan type B1 is used. So now we have done all the configuration required. So next we will move for the master data creation. So this phase involves creating the core transactional data element for the service. So first, create new service master. We will go to the T code AC03. Here we will create a service master. The service master defines the specific service being purchased, its unit of measure, valuation, and classification. Let's create a activity number that is 1 4 times 0 21 for foundation construction for building. This service is linked to service category, that is we have created BUIL, and has a base unit of measure of M2 square meters. Next phase, in phase 3, we will create the purchase order PO, create in T code ME21N. The purchase order PO is the document where all configured elements, the service, the down payment, and the milestone plan are brought together for execution. So step 1, create purchase header and item. So here we will go to the ME21N transaction code, enter the vendor 4045 for Baja Electrics. For the item, choose item category D, indicating a service, and enter the short text building construction. Item category D signals that the item is an external service, not a material, triggering service management functionality. Then point number 2, enter service details. In the service tab, enter the service number that we have created previously in AC03 transaction code. So that service number 1 4 times 0 21 we will enter here. The net value of the PO is set here. This links the PO to the detailed definition of the work to be performed. Then third, maintain delivery setting. Go to the delivery tab and check GR Non-Valuated. For most external services, the actual valuation accounting entry happens upon invoice receipt or service entry sheet acceptance, not upon physical receipt of the service. So checking GR Non-Valuated prevents immediate valuation upon service entry sheet creation. So we need to check that one GR Non-Valuated over here. In fourth, configure invoicing and down payment. Go to the invoice tab, deselect GR based IV, select tax code V0, select DP category M mandatory down payment and set the down payment percentage 20%. So GR based IV must be unchecked because payment is based on the invoicing plan milestones, not purely on the service entry sheet. The mandatory down payment 20% or 20,000 rupee INR is flagged for immediate financial processing. This overlays the predefined milestone schedule onto the PO item. The system automatically generates deadlines and the payment percentage for the milestone. For example, foundation completion 10%, final handover 30% based on the configuration in phase 1. So, what would be the result? The standard PO for an example 714 times 6 times 040 is created here. This document legally binds the company to the vendor based on the milestone payment terms and the mandatory down payment. So phase 4, financial execution and clearance. So this phase handles the flow of money starting with the advance payment and ending with the clearing processes. So step 1, create down payment request in F47 transaction code is used to create this. This is a special item recorded in financial accounting FI requesting the down payment amount rupees 20,000 against the purchase order. This does not involve an actual payment yet. It initiates the process. Document 1001 posted here. Then step number 2, post actual down payment in T code F48. This is the actual financial transfer of funds to the vendor account 4044 vendor here 4045, debiting a special GL account and crediting the bank account. When the first milestone, for an example, foundation construction is physically completed by the vendor, the ordering party formally accepts the service by creating and accepting the service entry sheet. This step confirms the work is ready for invoicing. So creating service entry sheet ML81N is required after the post actual down payment in F48. Then we'll in step 3 create service entry sheet SCS in T code ML81N. When the first milestone, the foundation construction is physically completed by the vendor, the ordering party formally accepts the service by creating the accepting the service entry sheet. This step confirms that the work is ready for invoicing. Then step 4, post vendor invoice Miro. The vendor sends an invoice which is processed here. Since the purchase order utilizes a milestone plan, invoices are typically posted upon completion of the milestone outlined in the invoicing plan. Then step number 5, down payment clearing in Miro. Miro down payment clearing, we will use T code Miro, MIRO. While posting the incoming invoice, the initial down payment rupees 20,000 linked to the PO purchase order is selected and proposed for clearing. This ensures the vendor is not overpaid. The subsequent invoice amount is reduced by the advanced paid. The next sixth step, clear the vendor down payment in T code F54. This FI transaction formally clears the down payment request document 1001 2001 against the subsequent invoice document, moving the amount out of the special GL account and adjusting the vendor liability. So document 1002 posted here. Then seventh step, post outgoing payment in T code F53. The final step, post the remaining payment to the vendor 4045 for the completed and cleared invoices, settling the full transaction amount. So this is what we did it throughout this process. We understood how these documents are being created, how the system is going to settle down the payment that is done through milestone invoice, and we will understand about the purchase order creation, service entry sheet, Miro, and about the procurement to pay process also. So this is all about. Thank you.